Hey everybody, Chuck Barone. Monday, November the 25th, 28th. Damn, I got my dates all screwed up. This holiday has really got me going. It was a very, very busy weekend with family and all that. But anyway, I miss dates all the time. It's crazy. November 28th, Monday, 2022. Here we are. Fresh week of crazy coming up. If you looked at these markets at all today, you got a little bit of an idea of what's coming our way. Before we get into the show, though, as always, I just want to thank everybody for your support, for watching the videos, for your likes, questions, comments, sharing the videos, and everything you guys do to make the channel a success every day. We appreciate you guys. In the markets today, well, again, as like I was saying, if you had a look at this stock market today, it was not a happy day. Basically just kept going down, down, down. A little bit of a very small rally at the end, down across the board. The Dow down almost 500 points, 497 points today. Markets coming to grips with the reality. You know, it's funny. The market basically right now being rumor driven. I guess they got some worries about China with their lockdown policies, and some companies' earnings haven't been so robust. But mostly this market's turning on how do people feel about what the Fed's going to do. And people are placing their bets accordingly. Now, last week, toward the end of the week, the market rallied because people were talking about the Fed lightening up. This, inflation's coming down. Here we go. Well, guess what? It's not. And the Fed's not. They're going to continue to raise rates, guys. The market can speculate up and down every day all it wants. Inflation's 7.7. We know what their target is. It's their number one mandate. They're going to continue to fight inflation. Markets be damned. The bond market today, unlike the stock market, basically flat today, with the 10-year sitting at 3.70%, up only 1 basis point today. The 2-year sitting at 4.44%, down 3 basis points. Market's still heavily inverted, telling us, advising us, warning us, whatever word you want to use, that there is a pretty significant recession coming our way, if we're not already in one. This has been the weirdest recession I've ever seen, where you have 2 consecutive quarters of negative GDP. Everybody knows these numbers and knows what this means. Now you follow that up with 2 consecutive positive quarters. We're going to get the third quarter, and that'll be in the data this week. And the fourth quarter, according to Fed now, up also. So it's just the strangest set of circumstances I've seen, because I'll tell you right now, real estate's in a depression, let alone recession. Anyway, bond market's flat today. Dollar had a decent day, up a little over 0.5 point. Sitting at 106.67 on the dollar index, still the champ. Other currencies gained a little bit as the dollar dipped from its high in the 114s, coming down to earth a little bit, but still the champ, still the strongest currency out there. So we'll see where I think the dollar might be moving up back to the upside. I think 107, 108 is probably fair value the way it stands right now. The European friends continue to raise rates, though. We'll see how long it holds up. Metals today with the dollar up strongly, down. Gold down $13.80, sitting at $1,742 and change per ounce. Silver down 50 cents per ounce today at $21.04 per ounce. Metals are still hanging in there. I mean, this dollar and everything that's been going on with the economy, metals have held up pretty well. I think that they're looking for a reason to rally. I think if the dollar comes back down ultimately, which it will, you're going to see a pretty nice spike in metals. Oil today down, selling $76.64 for a barrel of your West Texas Intermediate. Very small day. Gas, $6.79 for your million BTUs, down 3.5%, I'm sorry, as gas whipsaws around like it has been. Very volatile markets in oil and gas. Just, 2 weeks ago, oil was spiking up toward $90. now right back down $76. I don't know if this is actual demand or what they're perceiving demand to be in the future, or however they're figuring this, but lots of speculation happening right now. Bitcoin down today, $338, sitting at $16,240 per coin. Be careful with the cryptos right now, guys. There's just so much turbulence in that market. I know a lot of you guys are real believers in it, and that's cool. Just be very cautious because the signs are not good right now. It seems like the entire market for cryptos is weakening. It seems like at the very least, you're going to get some serious investigations going on. I'm sure there's going to be some alphabet agencies from the U.S. government involved in these investigations. When you're losing billions and billions of dollars of people's money, well, there's going to be an outcry. So be very cautious, because the news could very well be worse for cryptos coming up in the near future than better news. I think that this group, this FTX group, is going to have some real explaining to do. We'll see. I wonder what the extradition laws are from the Bahamas, because I'm guessing there's going to have some explaining to do here in the U.S. courts. It's going to be fascinating to watch it, but it really puts a lot of the cryptos at risk. I think you might see some panic selling depending on how things go in this investigation, so be very, very cautious with your cryptos. This week, as we do on every Monday, we're going to go over the data we can expect this week. It's a big week for data. A lot of stuff's going to happen this week. It's going to get this market all kind of frothy. Today's just a straight earnings day, quiet day on Mondays typically, but tomorrow we'll get the parade of stuff starting. Tomorrow we'll get the consumer confidence report, which is expected to be down, but not really down, because it was up pretty strong last month. It's going to come down from that, but basically to where it was previously. According to this index, consumer confidence is still pretty strong. Let's see what the report actually says. On Wednesday, we got a lot of data coming. We'll get the Chicago PMI, Purchasing Managers Index. We'll get GDP for the third quarter, which is going to be positive, guys. It's going to probably be up between 2 and 3%. We're going to get the Mortgage Bankers Index, which is not going to be very good news. And we're going to get more earnings coming from big companies on Wednesday. Thursday, we'll get construction spending, which is probably not going to be a good number for new construction. We'll get initial jobless claims, which are expected to be down. Last week was a surprise spike to the upside. We'll see now if that continues or if it kind of gets back to where it was with a hot job market. We'll also get personal spending data and personal income info. So a very big day on Wednesday and Thursday. Friday will wind down with basic unemployment information, non-farm payroll data, unemployment rate, which is expected to be unchanged. So big week of data coming. A lot of stuff that'll give us a little bit of an idea of reading the tea leaves of where the Fed's going to be going in the future. You guys know my opinion. I believe they're going to raise rates 0.5 point here in December. I believe if the inflation data still coming hot, that they're going to continue to raise rates into 2023. I think that at this point, real estate's already toast, so that's not going to be something that stops them from raising rates and continuing to. But they do have the parade. I was laughing today watching little financial news stuff, Bloomberg and CNBC this morning. The parade of Fed yo-yos marching out there to confuse the crap out of everybody, talking basically gibberish as usual, mixing messages. This Fed governor or Fed bank president says we need to continue the fight. This bank president says we need to ease up. It's affecting the economy. This president says they need to target a terminal rate of about 5.5. This one says they need to see more data. It's all designed to confuse, guys, okay? What I'm going to go by is what history tells us the Fed is going to do, okay? So it's one of two things. Either the Fed's going to continue the fight, which I believe is what they're going to do, or they're going to fold, let inflation run rampant, and lower rates to support the economy and the stock market. I think that the The answer to what they're going to do is self-evident by their actions already. They've been hugely aggressive raising rates. It would be kind of a real shock to me if they just turned around now and went all dovish on it, leaving the job unfinished. We'll see if I'm right or wrong. Also, a lot of the market crash people coming out have been really talking about it for a long time. I saw Robert Kiyosaki out with a big market crash prediction, his 500th market crash prediction. But now you're starting to get some mainstream sources, investment banks and lenders. Deutsche Bank coming out today saying they expect to see stocks fall 25% from where they are now. So the doomsayers are coming out in force in this market, which kind of kicks the contrarian in me into gear, believing that, these guys typically are not right. How many market crashes have we heard are coming versus how many market crashes have we suffered? Now, don't get me wrong, these guys keep predicting it until they get it right. You know what I mean? So if you're going to keep saying every month that there's going to be a market crash and you're going to say it forever until there is one, well, ultimately you will be vindicated. But I just don't see evidence of that at this point with earnings. Obviously, real estate is different than the stock market. The market will correct. I wish it would just all happen and get over with. Let's have a crash in real estate. Let's have a crash in the stock market. Then let's take all the suspense out of it. I'd much rather have it happen all in a couple of days than over the course of a couple of freaking years. Who's got time to be... What I'm looking forward to is telling you guys places to invest your money, things that are going to go up, ways you can make money. Since we've started this show and this friggin' economy's done what it's been doing, we've been nothing but defensive, advising you guys to get in the most defensive positions, to do the most offensive things we can think of, including what we've been mantraing, our mantra: save as much of your income as you can. Your target should be 10%. Invest your money very defensively. Values where you want to be. Dividends. So you're looking at defense stocks, health stocks, utilities, preferred stocks, consumer non-durable, soap and food, stuff like that. You want to be not taking on any new debt if you can possibly help it. And if you can, chip away at any existing debt you might have. You want to be a thoughtful spender, taking your time, being thoughtful about how you spend your money, because your money isn't going as far as it used to, so now there's some choices involved. Anyway, guys, hopefully we're going to turn the corner on this big negative economy sometime soon and start to go to more positive stuff every day instead of every day is a big negative. And we're looking for data to see how bad things are going to be this week, because we know what's going to happen. Tuesday, we're going to get consumer confidence. The numbers are going to be down. Wednesday, we're going to get GDP. It's going to confuse the hell out of everybody because it's going to show a positive third quarter. We already know we were pretty strong fourth quarter, almost 2/3 of the way through it. That's going to cause everybody to be up in arms and go crazy. At the same time, the mortgage bankers index is going to be down, showing crap loan situation, and corporate earnings are going to be mixed, which is the way it's been. Companies that are debt dependent having some difficulty with earnings. Companies that are big ad revenue dependent, with people anticipating recession, cutting back on advertising budgets and what they're willing to pay for advertising, even here on YouTube, guys. So we know that's going to be a bigness. So all of this stuff that's going to come out this week, there's not going to be much rainbows and happiness on these reports. It seems going to be just more, the only question is going to be the degree of how negative the reports will be, not if they're going to be positive or negative. So I apologize that it seems like every frickin' day we have to, give you guys bad news and advise you guys to kind of pull into your shells and be careful. But, this too shall pass. We have to live in the world as it is, not as we wish it was, right? And so we're going to continue to give you guys the best advice we can about how to protect yourselves in this environment. If we're not in a recession now, which We're going to be in one soon. All the signals are pointing to that. With rates where they are and the Fed going to continue to raise rates, it's going to be hard to see how we avoid one. The question is going to be, will it be a garden variety recession or will it be something more severe? We're going to be with you guys every step of the way, keeping you appraised of what's happening in the economy and in the world and what you guys should be doing to protect yourselves, or in the case of a growing economy and times being better, what you should be doing to grow your income, grow your assets. Anyway, we're back tomorrow. We're looking for the consumer confidence report and more information as we get it. We appreciate your guys' support. As always, if you like what you're hearing, hit that button, share it with your friends and subscribers, ask your questions in the comments. We appreciate your support. We'll be back tomorrow. Until then, guys, take care. Thanks.